sell life insurance, but there's really about 4 different types of policies that we can sell. Final expense, term. Um, Final expense would be like a whole life for individuals that are older and have a little bit more, uh, what I want to say, health challenges. And then there's term, there's universal life, there's index universal life, right? But the leads that come in determine how you're going to address that client. And usually, how you're going to address the client is based off of the first maybe 1 or 2 lines that you say when you call the client, right? After that, it's all pretty much the same except for an IUL or a universal policy, right? Those are a little bit different because, a lot of times people want to grow cash value. So you're going to have to run an illustration with those, right? But other than that, I mean, pretty much they're all the same. But here's the cool part. Everybody says it a little bit differently and has a little bit different take on it. And if anybody else can sell policies by the way they say it, why can't I, right? The big question is, why can't I? So then it comes into, what it really boils down to is mindset. What am I thinking to myself? What am I telling myself? And then the other part of it is action. How much action am I really taking? What am I doing with the knowledge that I learn, and how am I applying that? And if you're applying it and you're doing the action, but you're not getting the results, then something is not connecting with the knowledge part, right? Maybe you're not saying something. Maybe you're giving up a little bit too early. Maybe you're not being persistent enough. Maybe you're not asking enough questions. Maybe you're not finding the need, digging down deep into the why enough, right? There's multiple things that we can change, and that's why we're on this call, right? Is to do the role play, tweak it a little bit, and have some fun while we're doing it. Any other questions, concerns? I noticed, Aaron, you have your microphone unmuted. Did you have a question or a concern?
On the live dial session, I use Google Voice, um, and I try to do Google Meet for the actual calls, for IULs. Is that
Uh-huh.
supported on our live dial channel? Do I have the ability to get on there and unmute using those platforms? It's got to be like,
And unmute? Yeah, you can unmute
yeah, but I mean, is
on
it
those
going
live
to,
dial platforms.
are they going to be able to hear, a call if I'm on Google Meet or on Google Voice?
They can hear on the live dial platform if you're talking into a microphone.
Are they going to be able to hear the other side of the conversation?
Well, sometimes it just depends on how loud the other person's talking. If you're on a headset like you are, they won't. But that's okay. Some people unmute when they're on a headset, and you can generally get the concept if you're on a live dial platform of what the client is saying, even though you can't hear them. If you hear one side of the conversation, the brain fills in the rest, right? It's kind of like looking at a word that's all jumbled up and you can actually see the word.
And so when we listen in, we're hearing
Because your
one side of
brain
the
will fill in the
conversation as
rest.
well, yeah.
Yeah, so it's still valuable to hear one side of the
I
conversation.
didn't know if it was a deal where
Josh Lockhart does it all the time.
You have it on speakerphone or whatever, and you're able to hear both sides of it.
Yeah.
Okay.
Yeah. Yep. Josh Lockhart does that all the time. He does one-sided conversations. You can hear him, but you can't hear the client. Because a lot of times he'll have AirPods on. I don't know if he still does it. I haven't been on live dials in a long time, but yeah.
And again, when you're unmuted, people are just listening in and they're interjecting on your call. They're chatting you.
No, they're just listening in to see how you're selling the policy to the client.
Okay.
What you're doing to sell the policy to the client. A lot of them are new people. Some of them aren't new people, right? So by you unmuting, you're helping yourself and you're helping the new people.
And then after the call, someone
because some
sees
new
and comes
people have
in.
never sold a product. Sorry?
I'm sorry. Go ahead.
Because some new people have never sold a policy before. And so by you unmuting, they get to hear an actual sale take place, right? But on top of that, you're helping yourself because when you get done, or if you get in trouble on the phone and can't figure out where you need to go, now you can put your client on hold and say, "Hey, can I get you to hang on a second? I need to ask my senior underwriter a question." And then put them on hold, unmute. Well, you're already unmuted on live dials if you're doing it live, and then ask the question, "Hey, can you guys help me with this? This client says this. If anybody heard the conversation, can you help me answer this question, or can you help me figure out where to put this client, what carrier to write, that kind of thing, right?"
And is this like a
So
breakout room type of thing on the live dial channel with all the
some live dial
different calls?
channels are.
Yeah. All right.
Some live dial channels are. Um, on Living Hope, not sure what we're supposed to be doing here, Kelly. Um, we didn't hear anything. I heard a little bit of a dial like a ringing, but that's about it. But yeah, on live dials, people are there just unmuting, right? And some people, a lot of live dial sessions, well, not a lot of them, but some live dial sessions, people don't unmute, right? That's why he was talking about that one live dial team put a clause in there that we have the right to unmute you if we see you moving your mouth, right?
But it's not
Because
just
some people
chaos
don't
where you're
unmute.
hearing 6 different calls going at once.
No, because if one is going, then the other one, everybody else is muted. And whoever, if there's a lot of people there, they will tell you mute because this person is unmuted, or the moderator will mute you if you're trying to speak over the person that's running a call.
Gotcha.
Yeah, everybody's muted unless you're running a call. Yeah.
And those vet leads were through our live dial.
No, the vet leads, you buy them in the ILC. They're like $23 a piece.
No, but I
They're
mean, we
just
were able to listen
veterans
in on
that,
those through the live dial channel.
yeah, you can listen in on all of them in a live dial session.
Gotcha.
Anybody that's running a lead, you can listen in on if they unmute, right? So people are on there for that purpose to unmute or listen to other people. But it's not always productive. Don't get me wrong. I mean, sometimes you'll go 2 or 3 hours and nobody unmutes, which is kind of a sad thing. But it's kind of like being at the office. Like I'm here in my home office, nobody else is here but me, right? So if you're on live dials, you're kind of in the office with all your buddies, you know. And if nobody's talking, nobody's running a presentation, you can chat, right? Like being at the office. So that way you're not alone, right? So you don't have to go into an actual office. You can just jump on live dials, get to know people, right? And that's the best way to do it, is just to get to know people. Talk to them, let them know who you are, ask questions. In fact, Drake, that's how he started. Drake Jeremani, he's at the top of the list right now. When he first, and he gives me props for this all the time. I'm not trying to brag, but I'm there to help anybody, right? Was it last year or the year before? He jumped into our live dial session. He's not even on my team. He's not even on Jamie's team. He's on Grady Paulson's team. He's direct right underneath Grady. Um, and he jumped on live dials, and it was, I think, like 10 o'clock my time. I had just got done running an appointment, and he just started peppering me with questions and questions and questions, and I helped him for about an hour and a half. I didn't even get off the live dial for till like 11:30 that night, and then I went to bed. While his time, he's in California, was in California, he was only at 9:30 when I jumped off the phone. And so that's kind of the way it is people will get on there, and the bold people, which you should be, never ever ever be afraid of asking questions when you're on live dials, because that's what it's for. People want you to. Tons of people are on there that are not bold or not courageous, and they sit there and they listen, and then they have questions, but they don't want to open up and ask. And that's where you're going to learn, is asking the questions. There's no dumb question. We had a guy that used to be on Jamie's team, not anymore. I don't know where he went, but his name was, we called him Nacho, because uh, he was from Jamaica, and his last name was Ihi Nacho. And he literally, this kid was not even on my team, but when I was on live dials, I wrote a lot of business on live dials live. And so he would call me even when I'm not on live dials. It would be 10 o'clock at night. I'm just about ready to go to bed, and he would call me. And then I'd be like, okay, I'm not going to answer this. I'm about ready to go to bed. And so I would press the mute button. It would go to voicemail. 2 seconds later, he's calling me back. I press the side button, and he's calling me back again. I press the side button, and no call. 5 minutes later, he's calling me again. And I'm like, okay, this kid is not going to stop calling me until I answer his phone. So then I answer the phone, and he's peppering me with questions about policies. Why this? Why that policy? How do I run this? When would you run this type of policy? When would you offer this? Which carrier is better for this? He's just asking every single question he could possibly do out there. Well, he was a slow starter. Within the first year, I think he was doing, 10 to 15,000 a month. But by the second year, he's doing $40,000, $50,000 a month. Why? Because he was relentless about asking questions, no matter what. He probably is, but I don't think he's on Jamie's team anymore. He, yeah. Huh.
How do you know
Well,
if
anyways,
the person responding to you is, worth getting advice from, or if they're writing business?
well, at first you don't. That's why it's important to get. Are you talking about on live dials?
Yes.
Yeah. So at first you don't. That's why it's important to get to know people, right? Just sit there, go in there, and run your policies, do your thing, and then as you're there for a while, you'll start to learn who's writing business and who's not.
I definitely want to take
You
advantage of
know,
it. I just don't know, again, if I'm able to with, you know, what I'm using for making dials through Google Voice, Google Meet. Maybe someone on there would be able to tell me.
why are you using Google Voice to make dials?
I just like it. I like being able to copy paste phone numbers. It's easier to go back to. I can see pretty easily the number of calls that have
Okay,
been made. If I get a call when I'm not on my computer, the way that it rings into me, I know that the person's inbound calling because of insurance versus any other type of call. There's a whole lot of reasons to use it. I just like it.
interesting. Okay, I just use my cell phone, so just curious. To each his own. Um, But if you have like another screen, you can put live dials on another screen. Or if you have
Yeah, I've got
a laptop and then a desktop, you can put one on the laptop, one on the desktop. If you have an iPad and a laptop, you can put one on the iPad, one on the laptop. It just depends on what you want to do and how you want to do it.
well, and I understand from a screen, access standpoint. I was more concerned with the audio coming through and people being able to hear it.
Well, I mean, you don't necessarily have to worry about that. They can hear you.
Okay.
And if they
If
can't
they can
hear
hear me,
you,
that's
then
yeah, that's fine.
they'll speak up and let you know.
Yeah.
Yeah,
Okay.
if they can hear you, then that's all you have to worry about.
Perfect. Thank you.
You know. Yeah. Yeah. What else? What else is on your guys' mind? Any questions, concerns?
Good morning. Good morning.
Good morning, Heather.
How you guys? I don't know if something wrong with the link. It wouldn't let me log in. I had to go back to an older link to get in here.
Oh, really?
Yeah.
Okay. Maybe it's missing a letter.
And
Sometimes
it
I get.
possibly, I started to read it. I'm like, okay, let me just hit an old link and call it today. I need to
Yeah.
get in.
So, any questions, concerns for you?
About?
Anything?
No, I'm just here to learn.
Awesome. Well, sweet. Let's get into some role play then. Let's start that. It's already 10:22. Let's do a role play. I'll go first since we were on here for another hour and 40 minutes. I'll go first. Somebody else can be the agent. I'm sorry. Somebody else can be the client, and I'll be the agent.
Okay.
I mean,
I can't be here all 2 hours, but I'm going to be here at least an hour, okay?
sounds good. Awesome, awesome. Let me get my note taker up, and then we'll go. Who wants to be the client? I don't know if he's does drugs or not. I'm just, I don't think he does. I'm just teasing.
No, there's a 3 p.m. Eastern time
Oh, he's on.
training.
Yeah, he is on SRS today. Yeah, and so what SRS Liftoff is? That's the website SRS Liftoff. What that is that teaches people about IUL and annuities. So that's a great call to be on.
Oh, is this the one that you
And I
have
believe,
at 1 o'clock? I think Mountain Time.
Yes.
yeah,
Yeah.
no,
Yeah.
it's
Y- Yeah, it'll be 1 o'clock Mountain Time. 2 hours
I
behind
believe it's
3
11
p.m.
a.m.
That's the one today. Yeah.
No, it's 3 p.m. Eastern, isn't it?
Well, you sent us a
Yeah,
text. Yeah. About
so it's at 11 a.m. Yeah, so it's going to be on at 11 a.m. Central. So in about 35
One,
minutes. So if you guys want to be on that call with Drake, you're welcome to jump off here and jump on that call. It's up to you.
11 a.m. Central will be 1 o'clock, 1 p.m. Eastern.
yeah. You had something
No,
taking
it'd be
place in
12.
the afternoon today.
Yeah, that's Grady's.
Okay.
So Grady's call, let's clarify this. Grady's call is at 3 p.m. Eastern at joinamericalive.com. I came up with the name, by the way. Not to take credit for it, but anyways. And then and then the SRS liftoff call is on Thursdays as well at 12 p.m. Central. So in 35 minutes. Okay.
How?
So the SRS liftoff call lasts about a
Oh, yeah.
half an hour.
Yeah,
So
it's
you
an hour.
guys can jump off and jump back on if you want. Um, but that goes over IULs and it goes over annuities as well. And so all they're going to talk about, I don't think they get into the nuts and bolts of running IULs, but they do talk about it and they teach on it. And so Drake will go on there and probably teach a concept on it. I don't know exactly what he's going to do, but Drake is good and he works his tail end off and he definitely deserves to be on there. So, okay, who's going to be my client? Kelly? All right. Ring, ring. Hey, Kelly, this is Sean. Just getting back to you here. I got you on the schedule to go over an IUL with you. Is that correct? Yep. The Indexed Universal Life. That's your understanding as well, right? Correct. Yep. So really, this call takes, on average, Kelly, 15 to 30 minutes, depending on the questions that you have. Yeah, it's really a discovery call. You're going to discover how an IUL works. I'm going to discover some things about you. As you probably may or may not know, you can't just go out and buy this type of coverage. You have to qualify for it. So along the way, I'll ask you some finance questions, some medical questions to determine what you qualify for, and then we'll kind of go from there. How does that sound? All right. So first of all, when is your birthday? 12073. Okay. And then what's your height and weight? Okay. And have you used any tobacco products in the last year? Okay. You don't vape or chew or anything like that either, huh? Are you married? Okay. No significant other or anything like that? Got it. Okay. Now, are you looking into the IUL for yourself, for your significant other, or for both? Got it. Perfect. If you don't mind me asking, what got you interested in the IUL, Kelly? When you saw the ad, let me rephrase the question. When you saw the ad and filled out that form, what intrigued you about the ad to fill out the form? Okay. What kind of options are you looking for retirement? Okay. So you're looking for security? Yeah. Okay. So you're looking for security in retirement with your money or for your health? Got it. Okay. Okay. So you want to make sure you have a good growth for retirement purposes. Is that correct? Okay. Now, do you have any type of well, let me ask you this. Well, let me ask you, do you have any type of life insurance product in place right now? Okay, so do you have anything that you own though, not work? Because we know you don't own the work policy, the work does. But do you have anything that you own? Got it. Okay. And then you mentioned security. What do you have that acts as life insurance that would go to a beneficiary when you die? Like a 401k, IRA, stocks, bonds, mutual funds, CDs, anything like that? Extra real estate laying on the side of the road. Okay. Okay. All right. So just a little bit in the 401k, or how much do you have in there? Okay. So not enough to live off of in retirement, of course. Yeah. And then any other type of investments? I see. What do you mean? What do you mean you've saw some people have some difficulties? Okay, time out a second, Kelly. Guys, I want to point out what I'm doing here, right? If you guys noticed, the first thing, I can't share my iPad with you on this. I don't know why. Maybe I can, I just haven't figured it out. But here's my financial inventory, right? And I don't know if you guys can see that, but I'm kind of jumping all over the place there, right? I went through the name, got the birthday, his height and weight, so that way I have some idea of who this guy is, what he looks like, what his build is he a smoker, right? And then the next question I asked him was, I want to find out what his major concern is. And for him, it's security in retirement, right? So now I'm not even going to ask him about what his mortgage is. I don't care about that right now. I want to dig deep into the security. So the first thing I asked is, do you have any type of life insurance? Because he knows this is life insurance. He said no. He said kind of a little bit at work, but I kind of blew off the at work because we don't count at work policies anyways, right? Because they're irrelevant. When they go to retire, they're not going to have it. They can continue it on, and the human resources department says they can continue it on. Yeah, you can take it with you, but what really happens, it goes from a group policy to an individual policy, and the carrier says, oh, well, we're going to re-rate you based off of your age and your health right now, right? And they will re-rate them. They'll give them insurance. It's guaranteed insurance because they're going to stay with the same company, but there's no reason why they don't change the rate on the policy. So instead of paying $100, now they may pay $600, right? So that's why we don't count the work policy. So then I went straight to, now his major concern, remember, is the security in the finances. And so now I went straight to, what do you have that acts as life insurance that would go to a beneficiary when you die, like a 401k, IRA, stocks, bonds, mutual funds, CDs, that kind of thing. And he says he has a 401k and he's got 20,000 in his 401k, right? And then the next thing he says is, he has some concerns. I forgot what the exact verbiage you said, Kelly. He has some concerns about, what did you say? Yeah. So hold that thought. Hold that thought. let me continue with that, but let me point something out before we go, right? So notice that I didn't even ask him about that. But by asking questions like this and asking the right questions, a comment may pop up like it did with him. And that's a pain point, right? I'm noticing, oh, well, that's a pain point because he said, I don't want to turn out like a couple of friends that I have, right? So what am I going to do? Just let it go and ask another question? No. That's where we want to start digging deep, right? Because we want to find out how does his friends correlate with security and finances? Obviously, they have a connection. That's where we want to find out. Because if we can get him to draw out the pain points of why this is a big concern to him, then it's going to make him want to buy the policy even more, right? So let's jump back into it, Kelly. Did you have a comment first? Yet, right? And that's the whole purpose of the questions, right? When you're telling, you're selling, but when you're asking questions, they're selling themselves, right? So let's jump back into it, Kelly. So what do you mean that you don't want to turn out like your friends? Really? So so your friends passed away, and along the way, you kind of, since you're friends with him, you saw that he wasn't prepared with any life insurance. He wasn't preparing with his finances, and his families had to come across and pay for everything. Did that create any contention in the family? Let me ask a better question. I probably shouldn't have asked that question. Let me ask this question. Because here I do this role play for myself too, because I love doing it because it helps me get better, right? So maybe a better question would be how did his families treat that when they had to step in and help out? How did they react to it? Oh, really? Okay. So she had to pay to fly out there. And then what did she do when she got out there? So not only does she have to pay for the cost to fly out there, she has to pay for the hotel, and the brother had to pay for it as well. Now, did this guy own a house? I see. Okay. How do you think the family felt about that since the brother wasn't able to leave anything behind or take care of his own finances? I see. Now, speaking with you just a little bit, you mentioned that you have 20,000 in retirement. Right. It's made for retirement though, right? And then you're setting aside for retirement, are you not? Sure. Okay. So do you think that the 20,000 is going to, if it grows, in the market with these current market conditions and taxes? Um, well, first of all, do you think taxes are going to go up or down by the time you retire? Well, whether you choose to pay them or not, they're gonna move. With the government and the current debt that it has, do you think inflation is going to stay the same or be better? I mean, do you think your cost of living is going to get better or worse? Okay, okay. And so, how soon, knowing, I'm a broker and I have access to about 30 plus A rated carriers. If I can find something that you can get approved for and, of course, fit it into your budget, what, how soon are you looking to, put something in place? I'm assuming you'd want to do it right away, right? Okay. Well, I need to ask more financial questions here. And then from there, I need to ask some health questions and then we'll go from there. Does that sound fair? What do you do for a living? Mm-hmm. Okay. And then what is your monthly income? 7,500? Okay. And then you're not married. And then monthly expenses. So if you were to add up your mortgage payment, do you have a mortgage, by the way? I didn't even ask. Okay. And then how much do you owe on it? Okay. Then what's the value of it? 450. Okay. So you have about 350,000 of equity there. Yeah. Yeah, if you want to, yeah, we can definitely talk about putting those into an IUL as well if you really want to create a better retirement for you. What are you going to do? You have any kids? Okay. Do you have any? Who would be your beneficiary? Who would be picking up the pieces for you if something were to happen to you? Okay. What is her or his? Okay. What's his name? Jerry. Okay. Okay. Now, with the mortgage, what is your monthly expenses total per month? So if you were to add up your mortgage, car payment if you have one, gas, utilities, credit card payments, Netflix, you know, food, date night, what would all of that add up to per month? And you can ballpark it. You don't have to be exact.
Ah, that's funny. Shouldn't have bust out another 1,000. A boat will break you. I've been there before. So, shouldn't have bought that damn boat. Oh man.
4,000? Okay. So if my math is correct, that leaves about 35 extra $100 per month. Does that sound about right? Okay. So how much is left over per month then, on average? So you have about 1,000 left over per month? Okay. Do you put anything into the savings account? Okay. So nothing in the savings? Okay. So what's that 5,000 going for? I'm assuming, and tell me if I'm wrong, that that is going for emergency purposes. Okay. If an emergency does happen, do you think that you would use the whole 5,000 or a portion of it? Okay. The only reason why I ask is because in an IUL, you can also borrow from that, but you can use that for emergency purposes. And what a lot of my clients like to do if they have any money stashed away under a mattress or something like that, rather than losing money due to inflation, they like to put it into something that's going to grow for them. And by putting a lump sum in, you can fast fund it to get it to grow faster. And so that's what a lot of my clients do. So we can talk about that. Let me ask you some health questions here. What prescription medications are you currently taking, Kelly? Zero, zilch, nada? Okay. Have you taken anything in the past year that you don't take anymore? Okay. Have you had any hospitalizations or surgeries in the last 5 years? Okay. Have you had any moving violations in the last 5 years? Speeding tickets, DUIs, anything like that? Okay. Any felonies or misdemeanors in the last 10 years? Okay. So just kind of going over your finances here, as you mentioned, I mean, you have 20,000 in the 401k. Do you feel like you're a little bit vulnerable? Like if something happens, you would be unprotected? Meaning that, like, if you got into a car accident, and you don't die, but you're laid up in the hospital for, say, 4 months, do you think that your boss is going to keep paying you? If you got disability, do you think you're going to get the same amount that you're earning every month now? Okay. Well, if you have disability at work, usually what they do is they pay out about 60% of your wages. Um, but do you think that that would hinder you financially if something like that were to happen? Okay. Well, the reason why I ask is because, with an IUL, you can get protection through all of that as well. Okay. So this right here, let me kind of explain how an IUL works. And this is the part where you want to take some notes. So if you have a pen and paper, this is a great idea to take some notes because you're going to want to write some of this stuff down. Okay. Do you have a pen and paper? Okay, so first off, the IUL is it's first and foremost a life insurance policy, not an investment. And the reason why I say that is because I have some clients that call me up and say, "Hey, Sean, I want to invest in one of those IULs." Well, I have to stop them because an investment goes up and down, and it's taxed. And we want to mitigate those latter two through an IUL, right? And what I mean by that is an IUL. Well, let me go a little bit further on some other topics, and then I'll dig deeper on that and explain it a little bit deeper. An IUL also can leave a legacy to your family. Are you familiar with a 401k? Well, obviously you have one. I forgot that you said you had one. I should say you're familiar with the 401k, right? Yes, I am. Okay, well, I'll kind of compare this to a 401k, just because that's what most people have. So with a 401k, let's say you've generated, 100,000 in your 401k and you pass away. Your beneficiary is going to get the 100,000, but they actually don't get to keep all of it. They have to pay taxes on that. And just to kind of give you an idea of what that looks like, if you're in a 25% tax bracket, your beneficiary will actually get about 75,000 after taxes. Okay. With an IUL, it's different. If you generated 100,000 of cash value, and you pass away, your beneficiary don't get the 100,000, they get the death benefit. And that is always going to be more than what your cash value is until you're 95 years old. And so if you were to have 100,000 of cash value, then your beneficiary would get roughly 150,000, 200,000, depending on how it's designed for you. And that is tax free. So you would be leaving more to your beneficiary than you have invested on the investment side of things. Okay. The other thing is that the IUL protects you while you're still living with living benefits. And what I mean by that is if you get hurt, you get sick, you get injured, you can pull from the death benefit or the cash value while you're still living to sustain loss of income. Meaning, as I mentioned earlier, if you got into a car accident and you didn't die, but you're laid up in the hospital for 4 months, you said you'd have to draw disability. Well, with your IUL, you can pull from the policy while you're still living, and it's not a loan. You don't have to pay it back. Okay. If you get sick, have a heart attack, stroke, kidney damage, liver damage, cancer, 1 in 2 males in our lifetime get cancer. 1 in 3 females get cancer. So that means either you or myself, Kelly, will get cancer sometime in our lifetime. Just going off of the statistics. Okay. And I've asked everybody that I get on a call with and the same question, and not one person has said that they don't know anybody. Do you know anybody that's had cancer or even passed away from cancer? Yeah, so that's how close it is to our families, right? Everybody knows somebody that's had cancer. And so if something like that were to happen to you, you can pull from the policy while you're still living. Okay. So time out. You guys can kind of see how I'm, going over these benefits. I'm talking about the insurance side first. And then what I do is I talk about the investment side. And I tie it all together by helping them understand how the payment works. But I don't call it a payment, I call it a contribution. Sometimes I call it a contribution payment. But I want them to get a mindset of this is a contribution, not a payment. If you say payment, people associate it with a bill. If you say contribution, people associate it with something they want to pay for, like a donation, right? So a contribution you want to pay for, a payment is a bill that you don't want to pay for, right? Even though you have to pay a bill, you want to pay a contribution, right? It's just a different mindset. And so that's what we're trying to do is create the mindset of, look, this side of the same product can protect you and your family. This side of the same product can grow your retirement tax free. Okay. So back into it. So I just talked about the living benefits, right? That's how it protects you while you're still alive. Now I'm going to tie it all together. I kind of create a U shape, right? This side over here is the protection side of things. Down here is the payment. Over here is how I'm going to talk about the investment side of things, right? So now I'm just going to go down and over, right? So I just talked about the living benefits that'll protect you while you're still alive. Now, the mechanics of it work like this. Every month when you contribute to your tax-free retirement, that contribution has 2 buckets. One bucket is your actual, oh, he dropped off. That's okay. I'll just keep going. He's going to come back on here. One bucket is the smaller bucket, and that goes to the protection side of things. That's the cost of insurance. That's what pays for your death benefit, and that's what pays for your living benefits as well. It's what leaves the money to the family if something happens to you, and it's what protects you while you're still alive if you get hurt, sick, or injured. Okay. The other side of your contribution, the larger bucket, that's what pays you. That's what goes into your accumulated cash value account. Now, that's just a fancy term for saying a savings account, right? And what do they do with that savings account? They index it with the market. Let me say that again, and I'll slow down a little bit. They index it with the market. What's the difference? Well, back to your 401k. Your 401ks, IRAs, stocks, bonds, mutual funds, they're all in the market. The market goes up, you're happy, hunky-dory, living life. Your market goes down, what happens? Cuss words start flying, right? And as that happens, okay, when that happens, if you look back at like 2008, bad things happen that fast, right? When bad things happened, 2008 happened, people lost literally 38% in their 401k overnight. When good things happen, they happen slow. If you think of COVID, when COVID came, 1 month later, the whole world shut down, right? Bad things happen, they happen fast, okay? So what do they do with an IUL? Well, the IUL participates in the gains. It never participates in losses. So as the market goes up, it participates. You may get 7%, 9%, depending on what the index did. As an example, the index of the S&P 500 is running about 9% right now, right? So if that were to happen, you may get 9%. If the index goes below zero, like 2022, it went to about 15.5% below zero. If that happens, you just get a zero that year. You don't lose any money. You don't gain any money. Okay. So, and then usually what I do, Kelly dropped off here, but usually what I do is I ask them, how do you, I ask them, if you had 100,000 in a 401k and you had 100,000 in an IUL and the market tanked and dropped 50% overnight, how much would you have? And the client would say, well, you'd have 50,000. How much would you have in your IUL? You'd have 100,000 because you don't lose any money. Well, now the market after a year goes right back up 50%. Now how much do you have in your 401k? Well, most people say 100,000 because they think it's just going to go right back to where it was, right? And that's the reality, is most people don't realize how much it costs you to lose money. In the reality, if you're at 50,000 and it went up 50%, you're only gaining 25,000 because 50% of 50,000 is 25,000. So now you're at 75,000. Whereas in an IUL, in a product where you never lost any money, you'd be at 150,000, right? And so, and then I kind of explain here that in both scenarios, the market did exactly the same thing. It went down and then back up. The market did exactly the same thing. The only difference here is a product that never lost any money. And so then they're like, oh, I get it, right? So then I ask them if they have any questions so far, and then I explain the borrowing privileges to them. And I'll say, okay, this is another thing that the wealthy have been using for years. And another reason why is because the borrowing privileges. Let's say you have 100,000 in your 401k and you want to take a loan out for 75,000, which you can do. You can take a loan out, but it's mandatory that you pay it back unless you're 59 and a half. If you're not 59 and a half and you don't pay it back, they will tax you and you'll have to pay a 10% penalty. So just to get an idea of what that is, if you're in a 25% tax bracket, you got 100,000 in there and you take out, let's say you have 150 and you take out 100,000 just to make math easier, and you don't pay that back, you're in a 25% tax bracket. Now you're paying 25,000. But they're going to 10% penalty you too. So now you're not paying 25%, you're paying 35%. So now you're paying 35 grand in taxes to Uncle Sam. With an IUL, there's no taxes. And so that money that you generate is all tax free. So when you borrow money from an IUL, same scenario, you got 100,000 and you pull out 75,000 to put a loan on a house, which you can do. But number one, you can choose to pay it back when you're alive or when you're dead. If you don't pay it back when you're alive, it comes off the death benefit in the end. Okay? But here's the big thing. Let's say you took out 75,000 to put a loan on a house. You now have 25,000 left in there. You can pay it back whenever you want to. But the biggest benefit is that you're now compounding interest on the 100,000, even though there's only 25,000 in there. Why? Well, here's why. When you borrow money from an IUL, you're not borrowing from yourself. You're borrowing from the carrier. Okay? And so when you borrow from the carrier, your accumulated value is going untouched. How do you know you're borrowing from the carrier? Well, because it comes off the death benefit in the end. Why would the carrier loan you money with no questions asked? Unlike a bank would. When you go to a bank, you get credit checked. You have to answer 15, 20 questions that you never, they don't even need to know about. But with an IUL, they don't even ask questions. So why would they loan you money? Because they know what the collateral is. The collateral is the cash value. And they know for sure that you're going to pay them back. But they don't care when you pay them back. They don't even care if you die first before you pay them back, because it's going to come off the death benefit in the end. That's what they're designed to do. So then at that point in time, I always ask the client, do you have any questions on that? And they'll say, nope. Do you think this would benefit you, yourself, your family, your retirement? Yeah, of course. Now, this is the point that I go and I reschedule the appointment and I ask them the two numbers. I want to find out, before I schedule the appointment, I want to find out what their contribution level is, right? I want to find out what they want to put into the policy. I know how much extra money they have. I know how much they have in the savings, right? And now they know the benefits. They want the policy. They want something that's going to save them money. They want something that's going to grow their retirement. And so they want it, right? So they're going to be honest with me for the most part, and sometimes too honest, right? You'll get people that have an extra $2,000 a month and they want to put $5,000 a month into this thing. And it's like, how are you going to do that? But you just ask the question. But here's the reality. You ask a better question, you get a better answer. Here's two different questions. How much do you want to pay for this? $100. Here's another question. How much do you want to put away for your tax-free retirement? I can afford $200. Here's another question. How much can you afford to put into this? How much is comfortable for you? Now, every single one of those is not going to get the best answer. What you want to do is preface the question, help them understand the reasoning why you're asking the question. And so what I do is I compare it to like a term policy. And I'll say, Kelly, this isn't like a term policy where you call me up and say, hey, Sean, I need $100,000 worth of coverage, and I tell you it's going to cost you this amount of money. This is more along the lines of, now I'm framing the question that I'm going to ask. I'm framing the question. Okay. This is more along the lines of how you want to, what kind of lifestyle you want to live in retirement, how much you want to contribute to that lifestyle that you want to live in retirement. Now, just so you know, now I'm going to tell stories, right? I'm going to set it up as keeping up with the Joneses. If you see a guy with a brand new Ford across the street, maybe pretty cool, maybe awesome, right? You're a Ford guy, he's a Ford guy, cool. But all of a sudden, 6 months later, another one of your neighbors, two houses up, he buys a brand new Ford. You're still driving a 1990s Ford. 2 months later, another guy on the other street, good friends with you, he buys a Ford. Everybody's driving brand new Fords. They're in your top 5 circle people, 3 of the people that you hang around the most. What do you think that you're probably going to do over the next year? Figure out a way to buy a new Ford. It's just statistics, and it's just the way the world works, right? If you hang around let me put it this way, the 5 people that you hang around the most, you can take a look at their income, and your income will be right about in the middle there. So quick tip, you want to get rich, you want to be financially stable, you want to be, have extra income, hang around people that do that. Hang around people that are like that, right? But back into the IUL. So now I'm going to preface this. So most of my clients put in $1,000 a month. I have some clients that put in $2,000 a month to their retirement. Some clients that put in $5,000 a month, $10,000 a month. I even have clients that put in $50,000 a month. It really all depends on what kind of lifestyle you want to live and how long you want to pay for your retirement. So knowing that, I need to get 2 numbers from you, Kelly. Okay. I want you to think about a whole year. 11 months out of the year, when things are going well, you're doing great financially, and you're making really good money. If you were to build for your retirement, what is the max contribution that you would want to put away for your tax-free retirement? And then on the flip side of that, 1 month out of the year, when things are not going so well, maybe the wheels are falling off the truck because you got so many repairs, what is the minimum you would want to put in your tax-free retirement no matter what? And then I zip it and I just shut up. And a lot of times they'll talk themselves through it. Like, I didn't know I was going to have to come out with that right now. And I don't say anything. I just let them talk themselves through it. And then they'll come up with a number. So throw me a couple of numbers here, Kelly. It's okay. No worries. So 600 and 300. Okay. Now, something I want to point out. Okay. So first, what I would do from now is I would say, okay, great. Not a problem. No matter what he tells me, he can tell me $100. No matter what he tells me, I'm going to say, okay, great. Let's reschedule. And at that point in time, that's the fun call. That's where I'm going to show you how much money you can have in retirement. And I'm going to run what we call an illustration for you and share my screen with you. So my next availability would be on Saturday at this time or this time. I'm going to give them 2 options, right? And then I would set the appointment, send a confirmation, boom, done. Then we move on to the next call, right? Now, a couple of things I want to address. He said $600 and $300. That's decent for him. Decent. Not great, not bad. That's a decent contribution for an IUL. Why? because he's 52 years old and he's pretty healthy. Okay. He's 52 and pretty healthy. And the rule of thumb is with an IUL, you want to have them put in about 10 times their age. If they're 20, 10 times their age would be $200. If they're 50, 10 times their age would be $500. He's 52. He said $600. Not a problem. Can I get him to put in more? Possibly. He's got 5,000 sitting in a bank. But I'm going to address that on the next call, not right now. Why? Because I want him to show up to the next call. If I talk about this and then he goes away, sleeps overnight, and he wakes up the next morning with a conclusion of, I can't make this work, he's definitely not going to show up to the next call. He's going to figure out, well, I'm too busy to show up to the next call, and then cancel the appointment, right? So I want him to show up. So I'm not going to address any of that until I get on the next call with him. Let's say he came up and he said, you know what, I can put in $200 a month, which is what I had. I was talking to another agent this morning, and he has a client like that. He wants another IUL, and he wants to put in $1,000 a month, but then he remembered, oh, I'm already paying $200 a month for this other IUL. Well, the agent got him to send the illustration, an as-is illustration of how his IUL is performing. He's had this IUL since he's 51. He's now 62. And he has $11,000 of cash value in his policy that he's been paying on for 11 years. He's now about to go into retirement, but he's only got $11,000 of cash value. Why? Well, the guy started his IUL at 51 years old. 51. He started his IUL at. And at $200 a month, that's an underfunded IUL. And taking a look at his policy, he can have his policy, if he wants to pay on it for the rest of his life, that's what the guy designed his policy to do, is pay on it for the rest of his life. Okay, so he's going to be at 85 years old, still paying $200 on his IUL. But the problem is, at 92, his policy lapses. Why? Because the cost of insurance is going up and going up and going up. He's not putting enough into the policy. And so if Kelly were to told me I can put in $200 a month or $300 a month, and I know the rule of thumb is 10 times your age, I'm definitely going to address that on the next call. That, look, can you come up with $600? And I'm always going to estimate higher than their age. So if he's 55, I'm going to say 600. If he's 58, I'm going to say 600. If he's 52, I'm going to say 600. Because he may come down and say, well, I can do 550, right? Because I'm going to tell him 10 times his age, but he may come down and say 550, and then he's still right into that window there. Right? But if he says 300, I'm going to say, okay, well, I can start you with a starter policy, and then I may go with, Americo or Mutual of Omaha or something like that. Or I just may flat out tell him that, look, I can't write this policy for you. You're not going to have any type of a retirement. You're not going to have any protection. You have to be able to fund this policy the right way and commit to it. Otherwise, it's not going to work for you. Right? So those are really the three choices. And if he can't come up with it, then you have those three choices. But he's at $600 a month. What I would do on the next call is just show him an illustration. And then maybe I might show him another illustration as if, look, this is what would happen if you were to put $1,000 a month in here. And then he may say, okay, I'll do the 1,000, or he may say, I'll do the 600, or he may say, what if I just do 800? Put it right in the middle. Who does that help out if I were to do it that way? Well, it's going to help out him because he's putting more in the policy, but it's also going to help out us as the agent, right? Because we're going to get a little bit more on target premium, but it's also going to help him because he's going to have more going into his retirement. So it's a win-win situation for him and for us. right? But we always want to do what's right by the client. And and I always preface it by showing him that, look, you don't have to do it at 1,000, but I want to show you what this would do for you if you did. And all you got to do is change one number, press a button to rerun the report, and it reruns it at 1,000. So it's super simple. Then what I would do right after that is run the illustration, and then I'm going to ask him answer all of his questions, and I'll even ask him, what questions do you have? I don't have any more. Okay, great. The only thing that's left to do here is to submit a request to the carrier, because the carrier has to think about you. If you died the day after you made that $600 payment, and then the day after they approved you made the $600 payment, then you passed away, they're on the hook for $242,000, whatever that number is. So they're going to make sure that you are investable. So we don't know anything. We may be talking about all of this for no reason whatsoever until you get approved. So would you like to see if we can get you approved? Yes. Boom. I'm going right into the application. Okay. And that's how you close it right after you go through the illustration. Okay. So it's 11:23. I want one of you guys to do a role play as well. I want to give you some time to do that. But before we do that, is there any questions, concerns that you guys have?
I got a couple of questions. As
Okay.
you were going through the intake, you didn't spend a whole lot of time on his significant other. Was that just because they weren't in fact married, and he said that he was keeping finances separate?
Great question. Really, I didn't really focus on that because he seemed like he didn't really focus on that. I probably could have spent more time on asking more questions about it, because you never know. Maybe he's concerned about her. Maybe he wants her to have something, or him to have something if he passes away. But I didn't, just because I didn't feel like he was like super concerned about her. In fact, I asked him about who his beneficiary was going to be,
Yeah, he said
and he
maybe a
said his
friend.
friend Jerry.
Yeah, maybe a friend.
Yeah,
Yeah, we
yeah.
didn't spend much time on.
So I
We didn't
probably
spend
could
much
have
time
asked.
on the beneficiary either.
Go ahead. No, I didn't. And usually, because friends are more friends, right? If it was his kids, if it was a wife, I would probably have spent more time on that, asking more questions like what would they do? What would he do? But in my experience, when I've asked about the friends, really, they're just good friends. They can take care of themselves, that kind of thing. That's what I found just from selling life insurance. So based off of that, I could have asked more questions. You're not wrong to ask any more questions about the beneficiary. You never know. I mean, there may be a close relationship there and they're more concerned about it. I just chose not to go that route.
I have a question about
Sure.
the. I understand this is likely a one-off thing, but I still want to ask. What about when they just lie about their beneficiaries? And what I mean by that is, I had a gal who, on our initial intake, when I asked, is there a husband, spouse, anything like that, she's like, no. And I was like, okay, so went through and still did. Later on, she says that when I kind of pointed out, like, hey, you need to have a beneficiary, she said, well, do they have to be out of or do they have to be in this country? Because I have a niece that lives in another country and I'd like her to be able to take it. And I was like, okay, I can find out about that for you. And the answer is it has to just be, they have to have a U.S. bank account. They don't have to be a U.S. citizen. If anybody is curious about that, that's the answer. And then later on, we were trying to go through things. It comes up that she has a husband, and I'm like, does it matter?
If they're married, no, I mean, it doesn't matter if they're married. I guess there's a few carriers in my past that the beneficiary has to be the husband, but I haven't come across that, and I don't remember which ones they are. I haven't come across that in years, so it's not a big deal. But I would be kind of curious, and my flag would be turned red to figure out, why would she lie about that? Maybe she just doesn't have a good relationship with her husband anymore. Maybe they're on their way to a divorce situation. I don't know.
I don't know.
But most people don't lie about their beneficiaries, what I found in my experience, because that's one of the reasons why they're getting life insurance is because they want to take care of themselves, right? Obviously, they know that if you're talking about a cash value IUL and they want to supplement a tax-free retirement, that's their main concern. But in the back of their mind, if anything happens to them, they want to leave it to a loved one or a really good friend, right? So usually, I haven't had too many experiences about that, Tori.
Okay.
So
I hope I don't have any more experiences like that. I was just more, I don't know. I thought it was a weird situation. I was like,
yeah,
why would you say you don't have a husband? And then
crazy.
later I'm like, oh yeah, I have a married. I'm like, what?
Yeah, I know some people, especially with the way the United States is going after illegal citizens right now. Some people may have a concern about, their spouse if they're undocumented or something like that. I suppose that could probably come up.
That was a thought I had just because her niece lives in another country and she's not from here originally. But that was a thought that I had.
Yeah, people are getting shy about that.
But it doesn't impact, it doesn't impact the application or them, if it comes out that they said I'm not married and they are married.
I don't know. I can't answer that honestly because I've never had that experience. I know there is a question on the application if they're married or single. So I don't know. You'd have to call the carrier and ask them. But I would assume not. I don't know. I don't know how to answer that.
Thanks.
Second question. You spent all this time kind of building up the value of the IUL. You got him excited for it. Why pivot to that second call? Why not just go for a one call close here?
You can. You definitely can. But if I have appointments set up all day, like today, I have like 25 appointments set up. And so if I were to just go into an illustration and an application, I'd probably get the sale, but it may take 3 hours on the phone, right? It may take 2 hours on the phone. Mm-hmm. And so by me rescheduling, it also, if they don't show up, then I know that they really didn't want it and they weren't going to waste my time, right? Whereas if I went into the one call close and pressured them into it, if we have to go to underwriting, then they're not going to, they'll, if they really don't want it, they'll ghost me. And then I went through all of that for no reason anyways, right? So another reason why I like to reschedule it is to give them that time to think about it, right? And if they show up to the next appointment, usually they want the policy, right? So
on the second call,
that's kind of why. Go ahead.
On the second call, are you having to spend time focusing on getting that excitement back up, or do you find that the illustration accomplishes that for you?
Oh, the illustration accomplishes that. Yeah. So I just jump right into it on the second call and I'll say, okay, are you near a computer? They'll say, yeah. And I'll say, okay, I'm going to send you a link. All you have to do is click on it and you'll be able to see my screen. Okay, cool. So they're sitting there waiting. I've already drawn up the illustration. I've already put it together. Now I'm just going to hit the button and start explaining it to them. And that usually takes 20 minutes to a half an hour, depending on how many questions they have. And then after that, I just roll right into the application. Make sense?
Similar to Tori's one-off, there was a teacher that's pregnant that has a delivery scheduled in August. And I found that trying to draw out the pain points was delicate without, coming across like the guy that was putting negative juju out in the world about what happens to her as a new mom.
Yeah.
So that wasn't.
Sometimes when you feel like it's delicate like that, sometimes there's already a lot of pain there, right?
Well, and I'm normally not so sensitive to things like that. I don't have a problem really calling out an elephant in the room, but that one was tougher.
Yeah. But the pain points are really to help them understand that why they need the IUL and why they need it now, right? Otherwise, if we're not drawing out enough pain points, that's where we have to put the pressure on. And we have to say, okay, let's do this. Let's jump into the application. Let's see if we can get you approved. And now people are feeling like, wait a minute, right? And I used to do it that way. I'm not saying I don't. And I've done that way in the past, right? But the better way to do it is to help them understand why they need it now and get them to tell you that they need it now just by asking a question, right? And when they can start to see the big picture, because the people that fill out the form, they're not even thinking about the big picture. What are they thinking about? Well, I need a tax-free retirement. I'm thinking about my retirement. They're not thinking about how much they need to live off of in retirement. They're not thinking about how much they need to generate in retirement, right? And that's something we haven't even trained on is how to calculate how much they need to live off of, right? And that could become another pain point as well. That could help them want to contribute more into their policy. But by getting them to think of big picture of what happens to my beneficiary if I die, my wife, what happens to my kids if I die, what happens to my kids if I don't die, but I got in a bad car accident and I can't go to work? What if my income is gone from my family? What if my wife is the only one paying the mortgage and all of the bills because I am in the hospital because I can't move? What if I'm in a coma? What if my hips are detached from my spine? These things literally happen all the time, every day, and it could happen to each and every one of us. But people aren't thinking about that. They're thinking about, oh, how much I need some more money for retirement. That's it. Right? But when we bring that picture home to them and get them to realize that this really could be you, then it's like, oh crap, what have I been thinking? Then all you have to do is ask a question, a commitment question. Look, if I can find something for you that can get you approved and fit it into your budget, how soon would you want to get this started? I'm assuming you'd want to get it started right away after what you just told me. Yes, I would. Perfect. Now they want to go into the application and get it right away. If they bring up a pain point and they say something like, this happened to me 10 years ago. I broke my leg and I had this lady tell me this. I broke my leg in 18 different places and I couldn't walk on it for 9 months. So what do you think the next question I'm going to ask is? Well, if you would have had this IUL policy back then, do you think that would have helped you out? What's she going to say? No, it's not going to help me. She's going to be like, yeah, it definitely would have, right? So by asking the right questions, you get the right answer. You ask a better question, you get a better answer, right? So we're running out of time. It's already 25 minutes left. So who wants to do a role play? I'll let two of you guys do a role play and I'll sit back and watch and just throw some advice in there. Who wants to step
If no one
up
wants to go, I don't
into the
care. I'll
hot seat?
go.
I'll go.
Okay.
I'm
Aaron and I,
rusty though.
that's okay, Rusty. You can be Rusty. Rusty who? Rusty Parks?
Rusty Copper. I'm
Okay,
rusty. I'm
cool.
rusty.
Who wants to be the client? Who wants to be the agent?
I could be the agent.
Okay. All right.
Who is it? Me and Aaron?
I think so.
Yeah.
All right. Hey, Aaron.
Yes.
Hey, Aaron. How you doing?
Good, and you?
I'm doing great, sir. Thank you for asking. This is Height. I'm giving you a call. Got an appointment with you to go over the IUL uh, coverage.
Yeah, sounds great.
Oh, perfect, perfect. Um, so again, my name is Haitham, and I'm reaching out for for our appointment to go over the IUL, see what we can get you qualified for, and what are you trying to accomplish. Sounds good?
Absolutely.
All right, perfect. Aaron, what's your date of birth?
April 9th, 77.
Perfect. And who would be the beneficiary?
That would be my wife,
All right. And what's your wife's name?
Victoria.
You said
That's right.
Victoria? Perfect. Same last name as yours, Smith?
That's right.
All right. And what's her date of birth?
December 31st of 89.
All right, great. Um, I will get her phone number later. Um, and do you currently have any life insurance or annuities or anything in place that acts like life insurance?
No life insurance, just some stocks.
Just stocks. Okay. Hope they're doing good.
Some are better than others.
Yeah, yeah, I know how that is. Market go up and down like a roller coaster.
That's right.
And Aaron, what made you look into getting this type of coverage? Did any life event happen, or what was your main concern?
We've had some friends that have had some health scares. They've been eaten up pretty badly with medical costs, and we've got some health insurance, but it doesn't necessarily cover everything. And high deductibles. I know that medical costs can eat into savings and be pretty cost prohibitive. So that's the big motivator, and just being able to retire okay.
Yeah, absolutely, absolutely. And you mentioned something about your friends that you know that had some things to some difficulties that they ran into or what have you. What can you tell me a little bit more about that?
I mean, I don't know. I want to share a lot of information about their medical, just for privacy and all that. But yeah, they've had some health scares with their children, and you know, a lot of times they're not able to make it into work. Um, it's just hard to focus, hard to think about, and again, the medical can be pretty scary.
Right, and I'm assuming they probably didn't have any coverage. That's why they were going through all of that.
I don't know their entire situation. I just know they were pretty distraught over it.
Time out, time out, time out. So I want to stop you right there. Good questions, though, Hylam. But what I would do, remember, we don't want to assume because we may not assume the right thing.
Right.
And then we're also leading them down a path, right? If we, when we assume, we're kind of stepping in the spot of like telling or selling,
Hmm.
right? But maybe a better question would have been, did they have any type of life insurance? Did they have any health insurance? You're on the right track, but I think you just had to tweak the question a little bit.
Use the right words.
Yeah, yeah.
Using the right
Okay.
words. I got you. Okay. And you said, okay, do they have any life insurance? Okay. So obviously we want to look and see what we can do for you so you can have that type of coverage and also have ease of mind that your family will be taken care of in the event if something was to happen, which we all gonna die one day. We just don't know when or how, right?
Absolutely, we all get our turn.
Right, right. And Aaron, were you looking for coverage just for yourself or for you and your spouse, or maybe something for your kids?
Definitely for me. I mean, I guess I'd be open to coverage for uh, my family. It just kind of depends on what it looks like.
Right, right, absolutely. And Aaron, what do you know about IULs? Are you familiar with what they are, how they work?
Yeah, I think so. I mean, I've watched enough Dave Ramsey to kind of get an idea. I understand the broad strokes.
Right. Okay, good, good, good. Do you have any 401k, IRA, stocks? You said you got stocks, mutual funds, or anything of that nature?
Yeah, definitely have the stocks. Nothing really on the 401k, or I don't really like bonds.
Okay.
CDs don't pay out enough.
Well, the good thing about IULs is it's a whole it works like a whole life product. It's going to be there till the age of 120, okay?
I don't think I'm going to live
And
that
just
long.
to give you yeah, I haven't met anybody live that long, but that's just kind of in a way the carrier is saying, you're covered for the rest of your life. You know what I mean? Just to give you that security that you are covered for the rest of your life. It's not like a term policy where after 10 or 15 or 20 years, if you outlive the policy, then you don't have coverage anymore. And then you have to go back and look for coverage. And now you're 10, 15, or 20 years older than you are today, and your monthly premium is going to be much higher. With an IUL is going to give you that protection for the rest of your life to the age of 120. It's going to also give you it's going to give you the death benefit, the living benefits, and it's also going to give you a cash accumulation. So let me explain that a little bit to you how that works, okay? So every month you make a contribution to your policy. A portion of it will pay towards the policy, and the other portion will go to what I call a savings account, which accumulates interest in that account over the years, kind of like a 401k, but better than a 401k. And I'll explain to you how is it better. Like with a 401k, your money is tied directly into the market. The market goes up, it goes up with it. If the market goes down, it goes down with it. And if the market crashes, it crashes with it. I'm sure you've heard of people saying, I lost my 401k before, right?
Oh yeah,
Yeah. With an IUL, your money is not tied directly into the market, but it follows the market. So if the market goes up, you get your gains for the year up to 12 to 15% maximum. If the market goes down in red or if it crashes, you never participate in any of the losses. The worst that can happen is you didn't make any gains that year. But I will take that any day versus being in red. You know how stocks is when you're in a stock and it's in red is frustrating and can play with the mood a little bit. But with this, you don't have to worry about that. You're not going to participate any losses.
I just don't make more than 15%. Is that what you're saying?
Yeah, the maximum is 12 to 15% for the year, depending on the performance of the market. But you know that your money is in safe haven. So like if the market goes down, you don't participate in any of the losses. You don't lose a dime out of your money that you have invested.
I gotcha.
Okay. Um, Also, when they do pay out a check to the beneficiary, it will be 100% tax free. If we get you approved, it will be immediate coverage. There will be no waiting period. So just to give you an example about the difference between like a 401k and the IUL. Let's say you have $100,000 in your 401k and $100,000 in your IUL, right? Let's say the market is down 10% for the year. How much you would have in your 401k if the market goes down 10% and you have $100,000?
90,000 I'd have left.
That is correct. And what about an IUL? If you have $100,000 in there and the market goes down by 10%, how much do you have in there?
Well, if I don't lose any money, then I should still have 100,000, right?
That is absolutely correct. Now let's say the following year the market gained up 10%. How much would you have when your 401k?
So 10% of 90 is 99,000.
That's correct. Not a lot of people get that right. Everybody says back to 100,000, but in reality, it's back to 99. So on your second year, you're still in the negative. You haven't gained all your losses back. Versus with an IUL, the year that it was in red, you didn't lose anything. The following year, the market went up 10%. You got 10% gain, which is you had $100,000. How much would that 10% be?
That should be 110,000.
Right. You see the difference here? Like you're already in the positive versus a 401k holder is still trying to regain their losses. Do you remember the 2008 market
I do.
crash? Right. Which was pretty devastating for a lot of people. But when that market crashed that year in 2008, the market went down by almost 40%. It took 401k holders up to 5 years to gain their losses back. Versus the IULs, they were continuing making gains year after year and never participated in any losses. So, in other words, your money is in safe haven, that you don't have to worry or stress about being in red or losing it, and you don't have, and you know the security is there. Fair enough.
Fair enough.
All right, perfect. So what I want to do is I want to ask you some medical questions. Based on how you answer those medical questions, is going to give me an idea of which carrier can possibly approve you. And then we're going to look to see how much you're looking to contribute and what type of retirement you're trying to build. And then we'll put an illustration together for you and go over it together. Sounds good?
Why do you need my medical questions? I don't have to give like a social or anything crazy, do I?
No, as of right now, I don't need your social security number, but when we do the application, they are going to ask for your social security number, but they use it for two reasons. One, they use it to check your MIB, which is the Medical Information Bureau. And secondly, they want to make sure that you are who you say you are, not someone else that's looking to commit insurance fraud in someone else's name. So, it's just about security.
Okay,
Fair enough?
fair enough.
And are you in the state of Florida?
I'm in Colorado.
Colorado. Okay, I don't know why this came in as Florida, but Colorado is a beautiful state, by the way. I'm going there in September. I'm going hiking.
Yeah, if you got an Aaron Smith in Florida, that's some other guy.
It could be, it could be. The state was probably mistakenly on the form, but that's okay. I'll just fix that. And Aaron, are you a smoker or non-smoker?
None.
Non-smoker. That's good. What's your height and weight?
5'10", 200.
All right, good. All right, so I'm gonna ask you the medical questions. Have you ever had any heart attack, stroke, or mini stroke?
No.
Cancer? Stents? Have you had any stents put in?
Nothing like that.
Good, good, good. We're doing great so far. What about diabetes or neuropathy?
No, I've been pretty healthy. I only see the doctor like
High
once
blood
every
pressure?
5 years. Nope.
Once every 5 years? You kind of like me. I hate going to the doctor, so I don't go yearly like I'm supposed to, but I get myself in there every 4 or 5 years. What about high blood pressure? You said no for high blood pressure,
Right.
right? Lupus or RA?
Nope.
Asthma or COPD? Thyroid, anxiety, or depression?
Nope.
Kidney or liver disease?
No.
Sleep apnea?
Nope.
And have you been hospitalized within the past 12 months?
No.
Perfect. You sound pretty healthy to me. Any other any prescriptions that you take?
No.
All right, good. And are you currently working, retired, or disabled?
Employed.
Employed. Okay, great. And what do you do?
I'm in construction.
Construction? In construction. All right, perfect. And what's your monthly income?
Monthly 10,000.
10,000. All right.
You want before tax or after tax? That was before tax.
That's before tax? Yeah, how much is it after tax?
Probably 8.
8,000? Okay. And how much is your mortgage payment?
Mortgage is 3,000.
3,000. Okay. And is that your only income?
That's my only income.
That's your
I
only.
get some dividends
Okay,
off of
perfect.
stocks, but it's not a lot.
Okay, gotcha. Okay. So, Aaron, tell me a little bit. What are you trying to accomplish? What's your goal? What are you trying to accomplish today?
Again, just looking for supplement to insurance, but also, like you said, I kind of like the idea of being able to access some money, grow some money for retirement that I'm not going to have to pay a bunch of taxes on.
Gotcha. Okay. So, is your main concern though the death benefit or more of the cash accumulation? More of the cash accumulation part.
I mean, I do have some health insurance, so all things being equal, probably the cash accumulation.
All right, perfect. So what I'm going to do is I want to ask you something, and that will put me on the right track of what I need to do. With this being a policy that you're contributing to, it's not like a monthly payment, but it's more like contribution because of your savings account. But let's say you are, if you were to be having, a great year, a good year, and 11 months out of the year that you are doing great, um, you know, um, what would be the maximum that you would want to contribute to your policy, and what would be the minimum that you would be contributing that you would want to contribute to your policy?
Oh, I don't know. I mean, how much can I get for what do people usually do?
Well, I have some clients that do $1,000 a month. Some do 3,000, 5,000, 10,000. It's all preference on what they're trying to build, what type of retirement they're trying to build, and what they're trying to
What
accomplish.
kind of
So everybody's case is different, but those are pretty much the what I see from my different
what kind
clients.
of coverage do I get for $1,000 a month?
That's a great question. So what I gotta do is I gotta build an illustration for you, okay? So with you telling me your max and your minimum, it's gonna guide me in the right direction of building this a structure and this illustration for you. And what I'm gonna do is we're gonna schedule another appointment and go over the good stuff, what I found for you, how I structured it, and the cash accumulation and the death benefit, and explain everything for you.
Okay.
So you are fully aware of, so you can, um, uh, uh, that's the rusty part kicking in. Uh, so you can make a better decision on the type of investment that you're making. Sounds
Is
good?
it like a term where $100 a month gets me 100,000? Or
No, so that's the difference. Like, with a term policy, it's a simple, straightforward kind of thing. Hey, I want coverage, $100,000 is going to be this much a month. Bam, wham, thank you, ma'am. That's pretty much it. With an IUL, it's a little bit different because it has that cash accumulation part attached to it, and also because it's more like a whole life rather than a term policy. So you're not going to have to worry about it expiring on you.
okay.
Okay, makes sense. All right, so yeah, what I would want to do is basically, what I would like to do is reschedule our appointment. We'll go on our next appointment. We're going to go over the illustration. It'll be the more fun kind of appointment, not like today. Today was just asking you questions so I can know what I need to know, so I can see which direction we're going. But the next appointment will be the fun part. I'll be going over everything for you. I'll explain everything for you from A to Z, the death benefit, the living benefits, how they work, and also your cash accumulation and how much you would have accumulated over the years. All the good stuff that you would want to hear.
Okay.
Sounds good?
Sounds good.
Perfect. So today is Thursday. I do have some Saturday appointments available if that works for you.
Saturday, I've got to take my kids to soccer.
Okay. They play with the league or school.
There was schools, their school.
Okay. When is your next available day?
Maybe Tuesday, like around 5 o'clock. Should be done. Should be
$5.
done with work.
Is that what time you get off work? You be off work by
Yeah,
then?
I'm off at 5.
Okay. You get off at
Yeah,
5? Okay, gotcha. So you need some time to get home. How about a 6 p.m. Appointment? Would that work for
that
you?
should work.
All right, perfect. So I'm just going to ask you to make sure you have in front of a computer and with a good Wi-Fi connection, because I'm going to share my screen with you so I can show you all the numbers. It's a lot of numbers, so I want you to see it visually so you can get the feel of it instead of just hearing it.
Okay,
Sounds
sounds
good?
good.
Perfect. Do you have any questions for me?
How long on Tuesday?
Should be about 15-20 minutes.
Okay,
Unless depends on how many questions you may have.
okay,
So we're gonna go over everything, explain everything for you, and after that, what we would need to do is basically fill out the application and submit it to the carrier so we can get you approved.
okay,
So the process should be about 15-20 minutes, give or take.
okay. Yeah, I can do 15 minutes.
Sounds good.
Sounds good.
Cool.
All right, perfect.
We're almost running out of time here, so let me jump in. Let me give you some little constructive advice here, Hytham, if you're open to it.
Always.
So, a couple of things that I noticed. You asked way at the beginning. You talked about the 401k and then the IUL, right? And one thing that I would never do is say that that this is better than a 401k. Okay. And the only reason why I say that is because if they have 500,000 in their 401k, obviously we know that the IUL is better. But by you talking about the benefits of the IUL, they're going to determine that it's better for them anyways. But if you tell them that it's better, now again you're selling, and people are they feel like they're being influenced. We don't want to influence them. We just want to give them knowledge, right? I'm going to just kind of run through these rapid fire real quick, okay? Because we're running out of time. The other thing you asked was, what is your major concern? Why are we on the call today, right? Which is a decent question, right? But I think if I were to ask that question, a lot of times what you would get or might get is, I'm just looking to get a quote, right? A better question may be, we talk about framing earlier in the call, right? It may be something like, I know you filled out that form. When you saw the ad, what intrigued you to fill out the form to get on the call with me today?
Okay.
Right? Not necessarily what is your concern, right? What intrigued you about the ad to get on the call with me today, right? The other thing that you mentioned was, how much do you want to contribute to this policy? We don't want them to contribute to this policy. We don't want them to contribute to any policy. We want to know, how much do you want to contribute to your tax-free retirement, right?
Okay.
A different mindset of, now I'm contributing to my tax-free retirement. I'm not putting money into a policy, which is paper, which is something I'm going to look at on my desk and I may lose down the road. I'm contributing to a lifestyle that I want to live, right? What is retirement? When you think of retirement, what are you thinking about? You're thinking about a lifestyle, living in a house with your loved one, right? It's the big picture. Words can change the big picture like that, right? Using correct words can paint the picture for them, right? I notice you use the word contribution, which is fantastic. In the beginning, though, when you described the IUL, you used the word payment, right? At first, at the beginning of the call. That's where you should always use the word contribution, even when you later on down the road when you asked it as well. Contribution.
Right. What was that sentence you said?
The one you told me, or you asked the question, how much do you want to contribute to the policy?
Right.
And I said, all you have to do is change it to tax-free retirement.
Tax-free
So
retirement.
instead of policy, use tax-free retirement. Make sense?
Absolutely.
But other than that, good job, man.
Thanks, Bill.
Fantastic.
Thanks
All right,
for
guys.